don't you know? The darkness comes and the darkness goes.
A little Duncan chic. Good evening, everyone. I'm Brian Trumbore with your nightly review for Thursday, May 23rd. It's 4:02 p.m. Trying to beat a series of thunderstorms rolling through. Dow Jones finished down 12 points to 15,294. S&P 500 down a few points to 1650. NASDAQ also down just a few points to 3459. Gold closed at $13.90, up $23. Oil $94.40. 10-year Treasury 2.02% is the yield. Yesterday, Wednesday, the bull-bear ratio came out. Bulls at 55.2, bears 18.8. That's a huge spread between the two. And once again, I have to say, it normally signifies danger, the bull-bear reading being a contrarian indicator. Okay, I've been away a few days from you. I've been right here working away. I went back up to yesterday, the huge reversal we had in the market. The Dow Jones was up 155 points, finished down 80, so a 235 point reversal. Today, the Dow was down over 120 points at the open, but as you can see, it rallied back. But from peak to trough, we had a Dow decline over the past 2 days of about 275 points. So a mini correction in essentially one day. So why was that? Well, we had concern over the Federal Reserve yesterday, so I want to recap some of what happened. It started with Federal Reserve Bank of New York. President William Dudley saying in an interview with Bloomberg Television that policymakers will know in 3 to 4 months whether the economy is healthy enough to overcome federal budget cuts and allow the central bank to begin reducing its record stimulus, the $85 billion a month in bond purchases between treasuries and mortgage backs. Dudley said, I don't really understand very well how the tug of war between the fiscal drag and the improving economy are going to sort of work their way out. 3 or 4 months from now, I think you're going to have a much better sense of, is the economy healthy enough to overcome the fiscal drag or not? Then Federal Reserve Chairman Ben Bernanke told the Joint Economic Committee of Congress yesterday that the economy remains hampered by high unemployment and government spending cuts, and raising interest rates or reducing asset purchases too soon would endanger the recovery. At this time, the market was going up in response. Bernanke said a premature tightening of monetary policy could lead interest rates to rise temporarily, but would also carry a substantial risk of slowing or ending the economic recovery and causing inflation to fall further. Bernanke said monetary policy is providing significant benefits. Back to Dudley. Dudley said improvements in the economy may be obscured by a combination of the tax increases and the automatic federal spending cuts, the sequestration, which are curbing growth. Dudley said the goal of the Fed is really about achieving escape velocity. When are we going to have an economy where everything is sort of self-reinforcing, and when the jobs generate income, the income generates demand, demand generates more employment? I don't think we're quite there yet. Once a decision is made to begin withdrawing stimulus, we certainly want to do it in a way that it's not abrupt, it's not shocking, said Dudley. We want to make sure that the markets don't overreact to our first move in interest rates in terms of dialing down the rate of asset purchases, or later on actually starting to raise short-term interest rates. So as I said, while these pair of comments are out there, market is going up. But then in the question and answer before Congress, Bernanke said in prepared remarks, Bernanke said that the central bank, this is during the Q&A, could step down the pace of asset purchases in the next few meetings if the labor market continues to improve, and we have confidence that that is going to be sustained. So that is when the market reversed. Then the Federal Reserve's Open Market Committee minutes from its last meeting came out, and many Fed officials said more progress in the labor market is needed before deciding to slow the pace of asset purchases. A number said they were willing to taper bond buying as early as the next meeting on June 18-19 if economic reports show evidence of sufficiently strong and sustained growth. And that's according to the April 30, May 1st minutes. So you put it all together. I know it sounds like a mishmash. Well, that's what the market was responding to yesterday and then into today. And the question is there a schism between the members of the Federal Reserve Open Market Committee, even though the vote was 11-1 back in April to keep policy the same? Obviously, this June meeting is a big one, but more importantly, it's all about the jobs reports and the weekly jobless claims figures. Today that came out at 340,000, and I misplaced it. 340 or 343,000. It was an improvement. It was 340,000, an improvement from 363,000 the week before. One more item on the minutes. The Fed minutes. A number of participants expressed willingness to adjust the flow of purchases downward as early as the June meeting. However, views differed about what evidence would be necessary in order to do that and the likelihood of that outcome. One participant preferred to begin decreasing the rate of purchases immediately. That's the dissenting vote. While another participant preferred to add more monetary accommodation at the current meeting and mentioned, this again, April 30, May 1st, and mentioned that the committee had several other tools it could potentially use to do so. Just leave us alone. Okay, so then overnight, Tokyo's market, the Nikkei, after rising 75% about 6 months ago when it became apparent that Shinzo Abe was going to be the new Prime Minister of Japan and that he would initiate his stimulus efforts through the Bank of Japan. Well, after a 75% rise, the Nikkei decided to take a break, and so it fell 7.3% on record volume last night for us. A few things on Japan. Earlier, its April exports rose only 3.8%, less than expected after all of the monetary stimulus that has been put in place, the weakening yen helping exporters. But exports were only up 3.8% because of limited demand in the European Union, which continues to hurt in a big way. April exports to the EU from Japan were down 3.5%. To the US, they were up 15%. To China, up just 0.3%. Then, today, as the Nikkei was tanking, part of the reason was Japan's 10-year bond saw its yield rise to 1%. While that doesn't sound like much, and it isn't, it's quite a change from a low of about 0.45% on the same 10-year bond just a few weeks ago. So, you had bond yields soaring in Japan despite the aggressive efforts to keep rates down to stimulate the economy. about 1/4, and remember Japan has a gigantic national debt, about 1/4 of the national budget is interest payments on the government debt. In Europe, London, Paris, Frankfurt were all down exactly 2.1% today in response to Wall Street's crazy day yesterday and then Japan's 7% slide today. A Eurozone composite reading of services and manufacturing for May came in at 47.7 from 46.9 in April. That was a preliminary reading. The Markit, M-A-R-K-I-T, economics report. 50 is the dividing line between growth and contraction, of course, so 47.7, while it's an improvement from 46.9, is no great shakes. The Eurozone manufacturing index alone rose to a 3-month high, 47.8. Whoop-de-damn-do. None of this means the Eurozone is in recovery mode. Not even really stabilizing at lousy levels. Purchasing managers reported a 22nd successive month of decline in new orders in the Eurozone. Germany's composite reading did rise to 49.9, but France remained unchanged at a putrid 44.3. Skipping back to Asia, I forgot something. An HSBC preliminary reading on China's May Purchasing Managers Index for manufacturing came in at a 7-month low, 49.6 from April's 50.4. So it was a combination of Tokyo and the Chinese PMI that put a hurt on the European markets and our opening today. I hope that's not too confusing, but having been away a few days, I wanted to get that all down for the permanent record. I told you a few days ago that the presidential election coming up on June 14 in Iran is going to be a big, big deal. And Akbar Hashemi Rafsanjani, late Saturday, right before the deadline, announced his candidacy, but he had to be approved by the Guardian Council that said yay or nay on about 700 candidates. Well, the Guardian Council ended up on Tuesday selecting only 8, and Rafsanjani was not one of them. That's a big, big deal. It clearly undermines the credibility of the poll. By the way, on June 14th, if a candidate does not get 50%, there's a runoff the following week. So the Guardian Council, which was vetting all of these candidates, came up with 8 all conservatives. The leading candidate is now Saeed Jalili, the chief nuclear negotiator, which is interesting. He's seen as the leading contender. President Ahmadinejad, who is not eligible to run again. His hand-picked successor, Esfandiar Mashai, was also denied a place on the ballot. And Rafsanjani was seen by hardliners as a threat because he backed the 2009 opposition Green movement, which alleged that the presidential elections that year were stolen, and then he was accused of being behind the protest afterwards that President Obama did not support in any significant way, as he should have, as the United States should have. Yes, the decision to keep Rafsanjani off the ballot was a surprise to many. Several prominent figures in Iran have appealed to Supreme Leader Ayatollah Khamenei to reverse the Guardian Council's decision. Zahra Mustafavi, Khomeini, the founder, 1979, Ayatollah Khomeini, Khamenei. Anyway, Khomeini's daughter, who was supposed to be highly respected, said the decision to keep Rafsanjani off the ballot only causes greater rifts between Khamenei and Rafsanjani, once two very close allies. The daughter said in a letter, "I'm giving this advice that this decision, Rafsanjani's rejection, means nothing but causing a rift and ignoring the sympathy and interest of the people." The Iranian media didn't provide any reason for Rafsanjani's disqualification. Some say it's because he's 78, but that's bullshit. In a sign of possible lobbying on Mr. Rafsanjani's behalf, though admittedly nothing can be done that I'm aware of, he received support from some influential members of the Assembly of Experts, which he had been a member of when Ayatollah Khamenei took him off the Assembly of Experts. He had been pushed out as the group's chairman after failing to get enough support to leverage possible concessions from Khamenei on the 2009 post-election clampdown. So Ahmadinejad, referring to his hand-picked guy Mashai, said, "In my opinion, there will be no problem with the leader, Khamenei, and I will take up this issue until the last moment with him." But again, a Guardian Council spokesman said there is no provision in the election law for candidates to appeal. Rafsanjani made an announcement today, Thursday. He accused Iran's leaders of incompetence and ignorance. He posted these comments on an opposition website. "I don't think the country could have been run worse." That's Rafsanjani on the opposition website today. But he is not planning any kind of protest. He says, "I don't want to stoop to their propaganda and attacks, but ignorance is troubling. They don't understand what they're doing." Finally, with regards to Iran, the International Atomic Energy Agency in Vienna said that since February, Iran has added more than 520 advanced centrifuges, bringing to about 700 the total number of these new super-duper centrifuges that can enrich uranium about 5 times faster than the old centrifuges. But Iran has also limited the growth in its sensitive stockpile of 20% medium enriched uranium, but it's easy to go from 20 to 90. The hardest step is to get to 20%, get to 90, and then you can make a bomb. But they've been purposefully, it seems, limiting their total stockpile of bomb-grade fuel, that which could be converted to bomb-grade fuel, so as not to cross Israel's red line. And Israel and the United States and the other players are just waiting to see what happens with the June 14 election, but now we know a hardliner is going to be elected. That's all for today. I'm going to be back with you on Tuesday. Happy Memorial Day. Read my week in review. I post it late Friday night around midnight. Take care.